Welcome everyone, this is Kevin from the Yield Lab podcast. Every week we cover the topic of Web3, investing and entrepreneurship. Today we have Samir Tabar, Chief Strategy Officer at Bit Digital, which is a public Bitcoin mining company listed on the NASDAQ. Samir, you're a crypto OG, you also co-founded AirSwap, one of the first decentralized exchange out there in 2016, which you then sold to Consensus, one of the most influential companies in the Ethereum ecosystem. So in this episode, the goal is to do a Bitcoin and Bitcoin mining masterclass. So the audience gets a basic understanding of not only why Bitcoin is so important, but also the mix behind this technological and monetary revolution. So please, ladies and gentlemen, subscribe to our channel and turn on the notifications. And please also remember that nothing shared or discussed here is financial advice. And now on to today's episode. So Samir, I'd like to know a bit better of your context first. So what are the few key turning points in your life that defined who you are today?
Yeah, thank you for the question. I started in traditional finance. In fact, I started as a lawyer. I worked for a law firm in Wall Street called Skadden, and that law firm was representing financial institutions and basically all not the little guy, but the big guy. And I noticed while I was a lawyer how the system worked and how the system was frankly rigged. Doing that legal practice on Wall Street for about 5 years made me want to go into the sell side and the buy side in finance. I'd rather have lawyers as my service provider, not me being a service provider. So I went into banking. I ended up being head of capital strategy for a Bank of America Merrill Lynch out of Hong Kong, and I was responsible for the Asia region. And during that time, again, it was amplified, the problem of how the system was rigged against the little guy, and that bankers and lawyers were simply making money off the inefficiencies of the system. And there was this asymmetry of information that occurred where lawyers and bankers had an advantage over the guy on Main Street. Wall Street was definitely winning when it comes to the trade against Main Street.
Can you give some examples of like how the lawyers and the bankers are taking advantage of the small guy?
Yeah, but the small guy is making the investment in the trade, and the bankers are just continually just taking a commission, a split off the top for no particular reason except to just shift money around. They're not actually adding value. And so when 2008 happened and the banks had to be bailed out by the government, which was taxpayer money, this very mysterious person called Satoshi invented Bitcoin. Nobody knows who he is, but he was very disenchanted with the system, the financial system. And as everybody, and as probably you know, he proposed an alternative system where we could exchange value without an intermediary. The disease of the current system is the middleman. And the middleman has this asymmetry of information that he or she takes advantage of. What blockchain does is gets rid of the middleman. And if we could live in a world without middlemen, my belief is that this would be a much better world. If you and I can exchange value without somebody in the middle, corrupting or distorting the value between you and me, that's a much better world to live in. And that's why today there is this huge distortion and fight between DeFi, between crypto and Bitcoin and the old legacy financial system. There's this current big fight. And I can get into at the right moment what kind of arguments they're using against us that's successful, but ultimately fake and false.
Yeah, so maybe before getting into the deeper topic of crypto, can you just tell us what's your crypto aha moment? Because you said there's this person or these people called Satoshi in 2008.
Right.
But for most people, it's happened a bit later to realize, oh, this is something that's really interesting.
Well, after being a lawyer and a banker for 15 years, when the technology was invented, and I looked at the technology because I was listening about the hype and I was just curious what this was. I read Satoshi's white paper, and that was my aha moment. It was about 2014, actually. It was a few years after the white paper was published. So I was a little bit late to the game, but 2014 is still pretty early in today's standards. And I co-founded a company called Fluidity that created a product called AirSwap. And I was with two remarkably talented technologists. I was one of the co-founders. And we did an ICO, and it became a really famous company. And it was a decentralized exchange. And the reason why we were very excited about a decentralized exchange was, again, it solves that problem of getting rid of the middleman. And that's the problem we have today. All these exchanges with FTX and Celsius and so on, these are centralized exchanges. It goes against the philosophy and ethos of what blockchain is about. We don't need centralized exchanges. People are misunderstanding what crypto is about. Crypto and the revolution behind this technology is to have value and exchange value directly. And we don't need these exchanges to trade. We can use decentralized exchanges. We could use cold storage wallets to hold our crypto. We could use DEX to make a trade. We shouldn't be using exchanges. That's kind of reinventing the old world into this technology.
Yeah, so we're talking about decentralized exchanges, which basically is something that kind of took off with this DeFi thing in 2020. So you have a few of these exchanges such as Uniswap that were built in the previous bear market and then took off, but you were basically earlier than that.
We were really early. In fact, I think we were just too early. And that was one of our issues. It was difficult sometimes to get volume because people were just so used to the traditional exchange. And we did our best to do a really great UI experience and so on, but people did not understand the theoretical dangers of putting their crypto on exchanges. Now, people understand that. But many years ago, when we were telling people there is a huge problem doing that, any custodial centralized entity that holds your crypto, that's going to be a problem. There's going to be a hack and so on. And there is a saying in crypto now, not your keys, not your crypto. Like, you need to own your crypto and you need to have custody of your crypto. And the only way you can do that is through a cold wallet. And if you want to trade tokens, you do that through a DEX. But if you hold your crypto in an exchange, you're just reinventing that diseased old legacy world.
So that makes a lot of sense, and that's always made a lot of sense. The only issue is the kind of user experience and also the kind of habits of like normal people who don't really understand crypto to trust actually banks, and they feel better. And I would even say for myself, and I've been in crypto for quite some time, at a certain point when you have a certain amount of money in there, you feel more comfortable giving it to someone because it's just too much than keeping it on a cold wallet where you're just thinking like, maybe something happens and I lose the access or whatever. And so,
well, you wouldn't be able to lose your access to a cold wallet
but you'd lose maybe you'd lose access to the keys, or maybe the seed phrase, or maybe your laptop has a problem, or you start to think about all the things that could happen.
Right.
Because of the self-custody, it's great on one side, but on the other hand, you have full responsibility. And then when you have a certain amount in there that potentially is, life-changing or something, you're just thinking like, oh man, even me who is supposed to be like in this crypto ethos and all that stuff, I'm actually like more comfortable giving my money to Celsius or FTX. And then you see all the stuff that happens. So basically, how do we reach mass adoption with decentralized products?
Well, let me explain something just based on that comment. I want to just share some thoughts with you. If indeed you become like this whale, or you have a lot of money and you start getting worried having it as a self-custody, and you feel more comfortable giving it to a bank or an exchange, this is something that happens to people who make a lot of money and who are wealthy or who are on the way. They become targets of litigation. They become targets from the government. Your wife will divorce you. The lawyers will go after your assets. All these things, people suing you and people sanctioning you, you're vulnerable when you have things on an exchange because a lien can be put against it. And so I actually am pretty nervous, frankly, whenever there's assets on an exchange. It's just not yours and it can be taken away from you. We've seen in Canada where bank accounts were frozen because you were at a protest. Today in Iran, the Iranian government has sanctioned women, whoever doesn't wear a hijab, their bank accounts get frozen. That is a very disturbing and dystopic version of the future. And the only way we can neutralize that tyranny is by having a cold wallet, because a government cannot freeze your cold wallet.
Absolutely. So basically educating yourself and trusting yourself and realizing that the pros outweigh the cons, and maybe teaming up with some other people who understand crypto in case. Because for me, the main thing was, what happens if I die? How do people get access to my stuff? I mean, I kind of educated my parents, but you never know. So that's why at some point I was just thinking like, oh man, if I have my assets on FTX.
Well, it would be interesting if, you can create like a smart contract that if you die, a smart contract is XY statements, right? So if you die, the crypto goes to this wallet, your brother's wallet or something like that. That's the future.
Yeah, absolutely.
At the end of the day, with AI and with crypto, all these accountants and lawyers and bankers, they will be replaced by code. That's an inevitable conclusion. There's a lot of pushback and a lot of slowdown. These bankers and politicians, they're saying, oh, Bitcoin mining, it's bad for the environment. You're using like fake arguments to split the movement because nobody wants to damage the earth. But they never compare the damage that legacy financial system does to the environment. All those ATMs and the banks and the buildings that are sucking all the energy to create the legacy system. That's also an environmental carbon footprint that no one seems to be talking about. But they're going after Bitcoin because, again, it threatens their jobs.
Yeah. So let's talk about Bitcoin and Bitcoin mining. So first, let's set the context. Can you please define Bitcoin? So there is a lot of different definitions. So go with your definition of Bitcoin and try to keep the conversation simple, as if you're talking to your mother.
Yeah. I mean, as if I'm talking to my mother. So Bitcoin is digital gold. So if we step back for a moment, and you're my mother for a moment, and I'll say, Mom, just think about gold. It's a precious commodity. You have to mine it and you have to store it. And some people find it valuable. They don't use it to buy gum, but they have these gold bars and they could put it in their bank or vault or whatever. So you have to go into a mountain and you have to pick at the mountain and find the gold and you bring it to a vault. Bitcoin mining is very similar in a way, except there's no mountains and there's no shovels or picks. What it happens is you have a computer that's solving very complicated math problems in order to earn a Bitcoin, which is like gold. It's digital gold. And by solving the math problem, these are very complicated math problems, it earns the Bitcoin and it belongs to you. And so that's basically Bitcoin. It's just digital gold without hurting mountains and so on. It does take a lot of energy. These computers have to run very intensely to guess the math problems. And so that is the issue these days. However, there are ways to mitigate that. So for example, at Bit Digital, we have tens and tens of thousands of computers every day, every minute, doing the math problems. But we use hydro and wind and solar. We use renewable sources of energy. In fact, about 80% of our fleet is on renewable, carbon-free sources. And so we are one of the leading public companies in the world, making sure that the majority of our fleet is doing Bitcoin mining on a very responsible, carbon-free way. And we don't use carbon neutral. It's very different. We don't believe in carbon neutrality. And just to take a step back, carbon neutrality is you create the damage, then you buy these certificates to offset the damage you've done. I don't believe in that. We don't believe in that. For us, that's like Imagine you go into a room and you take a shit, and then you take an air freshener and you try to, that's not the way to do it. You should be not doing that at all in the room. And that's what we do. We use carbon-free sources instead of buying carbon certificates to neutralize the damage you've done. Very different.
Yeah, absolutely. So what?
Apologies for swearing on your podcast.
No. Makes the thing more fun. So why is digital gold so important? Why do we even need digital gold? And maybe can you give us an example of why it's better than physical gold?
Well, the environmental damage, and I don't understand why people don't talk about this, the environmental damage of physical gold is way greater than digital gold. There's child labor that's used in certain parts of Africa to mine that gold. There's an incredible extraction of the earth in order to get that gold. It's a very damaging and historically a colonizing activity. When it comes to Bitcoin mining, they're just computers solving problems, solving math problems. So no one's getting hurt. It's very different, the human cost of actual gold mining versus Bitcoin. And Bitcoin can actually replace gold. We don't need gold. The reason why gold is popular is that it acts as an inflation hedge, because people think there's a limited amount of gold out there, and when there's inflation, buy gold to hedge your inflation. Fortunately, the newer generation is beginning to understand this. The older generation doesn't understand. But Bitcoin is the ultimate proxy and replacement of gold. You don't have to buy gold to hedge your portfolio. You buy Bitcoin because there's only a certain amount of Bitcoin out there. Satoshi only allowed up to 21 million Bitcoins, and there will never be more than that. And so because of the limited supply of Bitcoin, we could use that as a proxy for gold instead of actual gold.
Is it fair to say that when you talk about inflation, you're less talking about kind of inflation we're experiencing now with the food and all that stuff, but more what we call central banks money printing, which basically has been happening since forever to fund wars, or
That's right.
Basically when there is a financial crisis, one of the first things that the government do is to lower interest rates, but also print money. And basically that's the kind of thing that people, it's kind of a hidden tax that people don't really realize.
That's right.
But that is making the value, the cost of your retirement higher, meaning
absolutely
what the thing that I invest in real estate or stocks to basically one day reach retirement is basically becoming more and more expensive because there's more money out there. Therefore, the price of these things become higher, and because the wages that people earn don't go up as much.
Right.
That's the problem. Basically, you're further and further away from your retirement because the central banks just print more and more money, and that's one of the main reasons why Bitcoin was invented, which is to hedge yourself against this what we call fiat currency valuation.
That's right. And, I really like your comments there. If you take a step back historically, there isn't one currency in the history of humanity that didn't end up going to zero. If you look at ancient Rome, ancient Greece, all the various European states, no country in the history of mankind has ever been able to have a currency that can last forever. Gold was the only one commodity that has been able to last forever, but we have a better solution than gold, and that's Bitcoin. And gold is actually a problem because nobody really knows how much gold is out there. We don't know. But everybody knows exactly how much Bitcoin there is out there because it's audited all the time. It's on the system and it's transparent. You know exactly how much Bitcoin there is out there. But just going back to your point on inflation, if you look at countries like Lebanon and Turkey, this past year, the currency lost 90% of its value. Imagine 90%.
Can you explain against what? So when you measure
the US dollar.
Yeah, okay.
So because the US dollar today is the reference point. But imagine you're in Lebanon and you're a farmer, or you're in Venezuela, another currency that's lost 90%, and you're working, and your savings are in Venezuelan dollars or in the Lebanese currency or in the Turkish currency. All those currencies have lost so much value compared to against the US dollar. And then you work all year, and then just at the end of the year, 90% of your purchasing power is gone. There is a solution to that. If that person, it's hard for an older person to do this, but younger people have the technological ability and prowess to, instead of putting money in the bank, put a little bit in Bitcoin, because the bank can't mess the Bitcoin up. The governments and the banks will mess up the local currency, but they can't manipulate the Bitcoin pricing. And so it's a hedge against a government irresponsibility on how they manage their own currency. And we've seen right now very clear examples in Turkey and Lebanon and Venezuela where people are, really hurt because the value of their local currency is off by 90%. I understand that people will say, oh, well, Bitcoin lost value, it was 69,000. It's now 20,000.
How do you justify that to someone who doesn't have a long term? Because at the end of the day, the some people will invest for the long term, fine, but some people who are trying to protect their wealth in the kind of shorter term need to keep this purchasing power, which by being very honest about this Bitcoin thing is a big issue, because it's a speculative store of value. So it's very volatile. How do you kind of justify that?
Like everything, you should have portfolio diversification. You can't just put all your eggs in one basket. If you look at, just speaking of the valuation, if you look at the Lebanese or Turkish currency, it lost 90%. Bitcoin did not lose 90%. It lost much less than that. So, I understand that's still cold comfort. There's been some value lost. But also, if you did buy Bitcoin at other moments in history, if you look at Bitcoin historically over the past 15 years, it does well. You have to look at these things in a longer term. But I understand your point. You may need the value now. Some people cannot wait. There's no perfect solution. But I could tell you one thing. If I were a woman in Iran and the government tells me that they can freeze my bank account, while at the same time the money of Iran is going down, currency is losing value as well, I would probably be tempted by saying, you know what, I'm going to put some money in Bitcoin because I know that is going to go up and down, but at least I know it doesn't go down. All currencies go down. Like this year, even the American dollar, 10% down. Yeah. Guaranteed.
And it's not going back up. That's the thing. That's the difference. If you have a bit of a more longer term view, it's these currencies go down.
They don't go up.
Exactly. And sometimes they might go, you might think, oh, they go down 2% a year or 3% a year, sometimes 10% a year, which if you compound it is terrible. But like, people don't think in terms of compounding. But also, probably more importantly, they're not going back up.
They don't go back up.
So that's the
the biggest shitcoin is actually the US dollar. If you had a dollar in 1980, that's worth about 10 cents today. Like the US dollar goes down every year. The value of a US dollar goes down every year. This year it's projected to go down about 10%. You are guaranteed to lose when you're in cash. And like you said, they all go down. And in the long term, cash is not king, actually.
Because people feel the pain now, and you feel less the pain when it's kind of like smaller pain every year for a longer term.
Oh yeah, it's the ultimate. It's the ultimate. Have you ever heard of the story of the frog?
Yeah, absolutely. The boiling frog.
This story actually changed my life, and the way I look at things, I always think about this story that I'm about to say. Whenever even if I'm in a personal relationship with a girlfriend, or I'm in a business situation or so on, I always think about this story. And it goes like this. There was a pot of boiling water, and they tossed the frog in the pot, and the frog was like, this is crazy, this is boiling, and the frog jumped out of the water. Then they took that same pot, not boiling this time, just normal, lukewarm, and they put the frog in the lukewarm water, and they slowly but surely made the water hotter and hotter and hotter while the frog was in there until it was boiling. But the frog did not know, because it was so slow and so imperceptible, the heat of the water going from lukewarm to boiling, that it just stayed in the water and eventually died. This is the situation that a lot of humans are in today. We're in that very slow but steady water being boiled. We're being cooked alive by the system, by the government, and so on. And so this is something that I always think about. Like, am I slowly being cooked alive, whether I'm in a relationship or in a business situation? I always think about that, because the slowness is the devil, you know? That's really where they get you.
Yeah. It's a tricky one, especially in a year like now.
Yeah,
You know,
of
last
course.
2 years was like so easy. I mean,
Yeah.
just talking about that, yeah, you know, like everybody's a genius. Things are going up because
Right.
crazy money printing.
Right.
This year is a bit more controversial because, you know, people talk about the Great Reset and all that stuff, basically,
Right.
which we don't really know what's going to happen.
Right.
This time might be different. Usually it's
Yeah.
not when we say that, but who knows?
I mean,
And-
this year it will be a year that a lot of people talk about, because it was look, we're in a very weird era. Like, COVID just is wrapping up or is over. Although, you know, in China it's now they're wrapping that up. But like, this was a weird time for humans, and COVID created this weird monetary policy that created this like explosion of inflation. And while COVID was happening, when people were locked down, a lot of people were on their computers, you know, at home. And in a way, crypto was kind of rediscovered in a very deep way, because people were just in front of their laptops trying to figure out what to do, because they weren't going to the office every day.
Gambling. The casino.
Yeah, that's true. Online gambling.
I found the 24/7 casino accessible from anywhere at any time. Let's have some fun.
Yeah.
No, but okay. So let's talk about Bitcoin mining. So
Yeah.
you started already a bit about that. Can you explain us why the Bitcoin mining is so important for the Bitcoin network?
Yeah. And I'll talk about that, but I would love to talk about like the history of how we got into Bitcoin mining.
Yeah, sure.
So Bit Digital actually started in China. The entire fleet was in China, and the co-founders thought it was important to have jurisdictional diversification. And they were a little bit worried that maybe China would have a sudden policy change about Bitcoin mining, because China needs to control the system, and Bitcoin is not something that they can control because it's decentralized. So we started moving our fleet from China to North America, to the US. And in the middle of doing that, we're importing 40,000 miners from China to the US. And in the middle of that process, which took a year, China announced a ban of Bitcoin mining. And that was crazy, because a bunch of Chinese Bitcoin miners were suddenly trying to get out of China because they banned Bitcoin mining. And we were already in the process of doing it. So we were very fortunate to get that process going. And we finally got our entire fleet out of China shortly after the ban. And now we're diversified across the United States and Canada, in New York, in Eastern Canada, in Texas, and so on. And we have various operating partners. And what we try to do is we just spend money on the machines. We don't try to buy, you know, an energy plant or anything like that. We just rent the rack space, and we put our machines there. And we try to do that because we want to be capital light. We don't want to like invest a bunch of money in real estate. We'd rather just invest our money in machines, and then we find these people who can power our machines, and we do a profit split with the landlord. They take a certain percentage so that they take care of our machines well, and we take the rest of the percentage. And that's the business model of Bitcoin mining. That's how we did it.
Okay. So basically, you don't pay any rent. I mean, you pay a rent if you're profitable.
That's right.
So the landlord takes a risk basically on whether the business performs well in terms of profitability or not.
That's how we get them aligned.
Okay.
Yeah.
So that's how the I wanted to ask basically how profitable is Bitcoin mining, because maybe for people to understand, just like gold miners is a very crazy word because it's a very volatile word. It goes on with gold cycle,
Yeah.
kind of like leverage on the gold price.
Yeah.
So you have these crazy prices of public listed companies that could go up and down, down 95% in a matter of few months or a few years. And Bitcoin is this, but on steroids. So how profitable is Bitcoin mining? I mean, let's first start with that, and then we can talk about the kind of risks.
You're thinking about it exactly in the right way. So Bitcoin mining depends. Your biggest cost as a Bitcoin miner is the power. Like how much are you paying for your power to plug in these machines? These like tens of thousands of machines, and we have different operators in different states, and each operator is stuck with a certain cost for power. We don't want to put all our machines with one guy. We try to diversify our operators to manage risk, but everybody has a different price. And there are a lot of Bitcoin miners today going out of business and facing bankruptcy. Why? Because they can't afford to run the Bitcoin mining operation when the power is high. And the power is high right now because Putin decided to invade Ukraine, and then became this whole power crisis that happened, and the cost of power ended up being much more than ever before. Historically, we could, basically predict how much the cost of power would be. But after the invasion, there was this power crisis. And as people know, particularly in Europe, by the way, the cost of keeping the lights on is much more expensive than what it used to be. And that has an effect in the United States as well. So fortunately, we have good deals, but if Bitcoin falls under a certain price, then you start to lose money because you have to pay for the power. And for us, the equation is a bit complicated because we have different operators. But for a lot of Bitcoin miners, my guess is that under 20,000, when Bitcoin's under 20,000 or under 19,000, they're beginning to lose money. And that's why we're seeing a lot of Bitcoin miners today going bankrupt or facing bankruptcy. So it's a big problem for our industry. And our sector has, been beaten up in the public markets. Fortunately, Bit Digital was very smart in its balance sheet. We have about $70 million on our balance sheet, and we are able to continue running. If we made no money today, we can continue our business for over 5 years, making zero money. For the next over 5 years, we can continue. So we know that we're in a really good position. We don't believe the crypto winter will last for over 5 years. So we were able to really be smart on our balance sheet. Unfortunately, a lot of other Bitcoin miners, they leveraged, they borrowed money to buy machines. And now, because of that, because they leveraged and they're stuck with these expensive power prices, they're going bankrupt. We never leveraged, we never borrowed money. We bought used machines.
So the key risks, to kind of recap, would be that we can separate is first a high energy price, which this year is pretty bad because of basically the inflation due to the war and also to all this money printing and the kind of like effect of all that stuff. So that's one thing. The other one is a bear market. So basically Bitcoin price going very low. I mean, both are linked, obviously, because your profitability will be determined by the Bitcoin price and also by the energy price. But let's say both are kind of independent still. So, and another one is the leverage.
That's right.
Which is pretty bad this year because all the lenders out there are blowing up. Due to the Luna, FTX.
That's right.
Everything situation basically. Basically all, the entire system, which was basically a huge credit bubble. So like,
which we didn't participate in that credit bubble, fortunately. what we did actually, unlike anyone else, is that most of our fleet was bought secondhand. We actually went around buying secondhand machines instead of new ones. We do have some new ones, but most of it is secondhand. The other public Bitcoin miners, they wanted brand new, sparkly, beautiful, sexy machines that they borrowed using credit lines. And that was great during the go-go days. But now...
So what would that mean? If I go buy newer machine, I guess they're more powerful. So
they're
basically helping you to compete better with others.
They are more powerful, but you're paying a really big premium for that. And that premium is not always justified.
Okay. So basically the kind of, now we're seeing like kind of like more boring businesses, or the ones who are a bit more, much more careful, are the ones who are still alive today.
Yeah.
And the other ones.
Yeah. We're actually we have one of the strongest balance sheets in the sector. It's really weird because the sector has taken a big beating in the public markets and NASDAQ. And we're in this weird situation where we have our stock, our market cap is less than the cash we have on our balance sheet, which is really weird. Why would any stock trade lower than how much money you have on the balance sheet? That makes no sense. But that's the distortion right now going on in the capital markets.
So how do you deal with, so first there is this kind of crazy Bitcoin mining that's linked to cost of energy, price of Bitcoin, leverage in the market, all that stuff. But you could be a private company. Now you're a public company, so the other thing you need to deal with is your stock price that can go down 90, 95%
irrationally.
Plus.
Yeah.
How do you deal with that on the top of like these super crazy markets, and how do you deal with the investors?
Yeah. So we have tens and thousands of machines that we have to deal with operationally, and we have tens and thousands of investors in our stock who, of course, are asking the right questions about what is going on. And if I were an investor, I hold stock in my own company, of course, as compensation. That it's a real problem because, like I said earlier, the markets are not rational right now. The public markets are not rational. When your stock is trading below how much cash you have on the balance sheet, that doesn't make any sense. And so there is a lot of frustration right now, and I completely understand. Nobody's more frustrated than I am. A lot of my net worth is tied to that, and it's just very strange for me to see how the capital markets are valuing the company. It just doesn't make any sense. But that's just the way it is because the sector, it's just a bear market, and eventually it will come back up again. Fortunately, we have enough money on our balance sheet to last for over 5 years.
So if you had to recap the key differences between miners that survive through these crazy market cycles,
don't leverage.
Those that don't, is the leverage.
It's leverage for sure. It's funny. A lot of lenders are miserable right now because they're not getting their money. They're not getting paid back from these Bitcoin miners that borrowed money from them. So we're actually, we're actually happy to lend money to Bitcoin miners who are in trouble. If you're in trouble, we're actually looking right now to lend money out. Why? Because the collateral is the machines. And we're okay with the collateral. Yeah. Most lenders, like hedge funds, they don't want those machines. Yeah. They just want the money back. But if we go into the business of lending, we're super happy with the collateral.
So maybe to explain to people, so basically you have cash that sits there that you can lend out to other Bitcoin miners in that kind of like difficulty.
Yep.
But you're not going to lend this money just for some interest. You're going to ask for a collateral against this in case they don't pay you back.
Collateral that we value.
Exactly. So basically you're going to go and say, okay, the collateral is going to be your mining rigs.
That's right.
And worst case, we just have more miners. Okay. Is there, linked to that, is there a kind of right balance or right kind of middle point of how many miners you want to have versus the size of your operations? So thinking about that, you might say, look, we're gonna lend you some cash and then we might get these miners back. but maybe that's too many miners to be profitable versus our size. Is there such like thing where you can have calculation on like I need that many?
Yeah, I mean, it depends on how much power you've secured. So we have, agreements with our various operating partners about how much energy they can give us, how much capacity they can give us. So we have spare capacity to put these other miners that we would potentially repossess into those locations. So you can't do this business if you don't have capacity. Fortunately, we have earmarked capacity.
Okay. So what's a key point about Bitcoin mining that we didn't talk about, but that you think is key for people to understand and to take away?
Yeah, I mean, look, people talk about Ethereum a lot. And the way one point that we didn't talk about that I'd like to make now is that there is this like controversy between Bitcoin and Ethereum and what's better and so on. I would characterize Ethereum and Bitcoin in the following way. Bitcoin is like gold, like I said, but Ethereum is like oil. What's the difference? With gold, it's just one thing, stored value. Oil, you could do many things with it. Plastic cups. Oil has so many different types of fundamental uses. Ethereum is like oil because you have these smart contracts, these if-then statements, and you could create all these apps on Ethereum. You can't create apps on Bitcoin. So Ethereum, of course, is not literally oil, but my point is Ethereum has different functionalities. So you could actually build stuff on top of the Ethereum network. You can't build stuff on Bitcoin. So that's why we're thinking about, and we already started, buying a lot of Ethereum. We're the first Bitcoin miner publicly to buy so much Ethereum, and we stake it. And so we want to be known not just as a Bitcoin miner, but a generator of digital assets. So yes, we're mining Bitcoin with our machines, but we're also buying Ethereum and we're staking it. And we would like to look at other coins that we can get and start buying, because we want the markets to understand that this company is not just about being a Bitcoin miner, but if you look at our ticker, and if you want to express a thesis in digital assets, and you want to do that through the public markets, they might want to look at our stock.
So is it fair to say that, so basically your business is mining Bitcoins and then sometimes keeping them, sometimes selling them, saying that you sometimes sell Bitcoin for other crypto assets such as Ethereum.
And that's what we're doing already.
Okay, so basically you're saying, and the thesis for that is Bitcoin is digital gold, it's a 21 million coin, limited supply, but now with this, basically after this Ethereum merge, you have this, basically Ethereum would be kind of the iOS or Android for decentralized applications, and ETH, the coin, would be the oil that you need to use, that people need to use these applications. But now after this Ethereum merge, there was basically a big change in terms of the supply, the dynamic of the supply of Ethereum, which is kind of closer to Bitcoin, let's say. And with this usage, it might make it very interesting, if not more interesting than holding Bitcoin itself.
I think there's we believe there's probably more juice in Ethereum than there is in Bitcoin. We definitely believe that. And, also from an environmental perspective, our company always wanted to make sure we do things responsibly when it comes to digital assets. And that's why 80% of our machines are using carbon-free sources of power to generate Bitcoin. But ever since the merge, as you know, 99% of the energy that it used to take to generate Ethereum is now gone. So it takes just basically, it doesn't take any energy really to generate Ethereum after the merge. And so it aligns with our with our environmental thesis to have Ethereum at this point, because it's so environmentally friendly. It does not take a lot of energy like it used to after the merge. So it's aligned with our environmental mission, Ethereum.
So is it fair to say that if you had to choose between Bitcoin and Ethereum, you'd rather go with Ethereum?
Yeah.
Okay.
And we're probably the first Bitcoin miner to ever say that.
Okay. And personally,
Yeah,
do you think the same? Yeah,
I do.
Okay.
I do.
Okay. Interesting. So is Bitcoin still relevant?
Yeah,
Because
it will be, because it's first of all, it's the mother coin. Secondly, it's the only proof of work coin out there. Everything else is proof of stake. So you need to have a proof of work coin, because it is the most decentralized democratic coin out there. Proof of stake has some issues. It's not as decentralized as Bitcoin. And so it's really good. If I were me, what I do is I have Bitcoin, I have Ethereum. I have both because, again, one's oil and one's gold. And it's just good to have both. They're not the same, but it's good to have both.
Yeah, so maybe going a bit more technical in that sense. So I'm asking, is Bitcoin relevant? The next kind of logical question is, and you are probably the answer with how you're thinking is, in this bear market, Bitcoin always acted as kind of like the store of value of crypto.
Right.
Is pretty much at its lowest it's ever been, and we're clearly in a bear market.
Yeah.
So why is that?
Well, I think there is a couple of reasons. First, the whole DeFi movement. People are understanding that there is value and in building on top of these other networks like Ethereum. You just, like I said earlier, you can't do that with Bitcoin. Bitcoin's the mother coin, but these other cryptos like Ethereum has a language called Solidity. And it's a language where you can program if-then statements, and you can create very powerful applications with these if-then statements. You cannot do that with Bitcoin. So these smart contracts that are involved in Ethereum and other cryptos, people are playing with that and realizing, wait, there's actually value in this. So that's why these other cryptos, particularly Ethereum, have become very popular. And by the way, there's about 20,000 developers on Ethereum. There isn't that many at all on Bitcoin. Why? Because you can't build on top of Bitcoin. It's just a stored value. It doesn't have the programming language like Ethereum and other coins out there like HBAR or Solana and so on. So we're bullish on the networks that have the smart contracts, because those smart contracts has the ability to create applications. And so we think that the younger generation, they grow up in learning about this. They've normalized crypto in their head. It's not like this weird thing like Jamie Dimon calls crypto pet rocks. I don't know if you saw what he said last month. The older generation
He changes his mind every 6 months.
He does. But look, baby boomers did not grow up with this. But Gen Z and the younger generation, they've normalized crypto. And so when this generation becomes older, it'll be a very natural thing for them to want to put some crypto in an institutional portfolio of assets. And they understand the difference between Bitcoin and Ethereum, because Ethereum has the programming language that Bitcoin doesn't. So back to your question as to Bitcoin dominance, Bitcoin will always be there. It's the mother coin. But there's a lot more juice in a network and a coin like Ethereum, because it has the programming capability of building programs.
So basically you are part of the camp, which is basically getting bigger and bigger by the day, of saying that this Ethereum thing is going to become at some point bigger.
Oh yeah, definitely.
Than Bitcoin. And
there were more transactions on Ethereum last year than Visa. So you can't build these NFTs on Bitcoin.
So what happens the day Ethereum gets bigger in terms of market capitalization than Bitcoin?
That's fine, but Bitcoin will always be there because it's the only proof of work coin. And you just need some of that as the insurance policy, because it's the most decentralized coin out there. So Bitcoin will never go away, and I believe it'll go up. I'm almost sure. Of course, we have cyclical up and downs, but Bitcoin is a deflationary asset, unlike fiat currency. So mathematically, it will go up in time. But it's good to have other coins out there that have different applications, like I mentioned.
Okay, so you clearly a big believer.
Bitcoin will always be a thing and it'll go up. It'll take some time. We have to go through this winter, but I am a big believer in functionality, and Ethereum has that.
Okay, so you're a big believer not only in Bitcoin and Ethereum, but in the crypto space in general, which basically is not going anywhere, because kind of a fair question for people who don't really understand this space is, what the hell happened this year? Is this normal in crypto?
Well, that's not crypto. What happened is actually not crypto. The DeFi actually didn't go wrong. It's these scam artists that use old centralized ways of thinking. When you take a centralized exchange, which is a model from the old financial world, and you put it on top of crypto, that's the problem. And as I mentioned in the beginning of this interview, people are beginning to understand that you don't have to hold your crypto or your Bitcoin in an exchange. You could just hold it in a cold wallet. And if you want to make a trade, you could do it through a DEX. People are beginning to understand that. And once people understand that, or at least enough people understand that, we're never going to have these issues again. The problems were the centralized custodial mechanisms. The problem wasn't the underlying technology of crypto. That has not broken. What broke was the centralized custodial offerings.
It was the problem, but it was also one of the reasons why so many people were able to access crypto in the first place.
That's true. That's true. Yeah, that's very true. It was a bad proxy, but you're right.
So this Luna thing blew up. All the lenders kind of blew up, pretty much all of them. FTX blew up. How much worse can it get than that?
Well, there's a bank run on Binance today, I don't know how that's going to land. That's going to be interesting. But, Sam Bankman-Fried was a crook, that's for sure. And it's amazing to me that he went on this media tour and wasn't arrested until just today. It's a very strange situation where he donated a lot of money to people in power in the government. And I feel like there is like something not correct happening in the system because of all those donations he made. But he's been arrested finally, and let's see what happens. But yeah, that's basically the Madoff of our time.
All right.
So it's not crypto that's bad. It's people. There are some people that are bad. The technology did not break. It's these bad people who use old models and try to make money that way.
Yeah, it's true, but it inevitably hurts the reputation of crypto.
Oh, totally.
Absolutely. All the retail people which are
very turned off,
got destroyed, and they're not going to come back for some time.
No.
And for some, if ever, because with what happened this year, that's the very sad thing about it.
Agreed.
You can say as much as you want, this is the future, this is so important, etc. Like at the end of the day, people look at results, and this year, even if people,
you're right.
You might say, yes, people did things wrong because they don't self-custody. But again, if we think about normal people, they just want to buy Bitcoin, ETH, wait 20 years, keep it somewhere safe, and a place that
that's true.
The place that raises hundreds of millions or billions from pension funds, whether Celsius or an FTX, is a safe place in people's mind. Yeah. So people who did everything right, buy Bitcoin, ETH every month for a couple of years, just leave it there.
It's a problem.
Earn a bit of yield, lost everything. So that's a big problem. And I mean, you might say what's a big problem for some is a great opportunity for others because we have these bear markets. But at the end of the day,
you're right.
It's really embarrassing what happened.
Right now I'm embarrassed to, there are some moments where I'm embarrassed to be in the industry because of all these people that have created such a bad name for us. I read a recent statistic that only 8% of Americans have a favorable view of crypto right now. That's a pretty low number. And I'm in the middle of this industry. Our company is in the middle of this industry by generating a lot of digital assets out there, whether it's Ethereum or Bitcoin. And we're doing, we're legitimate, but like the entire industry has a bad name. So it's a little bit embarrassing sometimes when people ask me, so what do you do? I'm like, I tell them, they're like, oh, are you a scam artist? It's like, it's unfortunate. It's really unfortunate.
That's what we're mentioning before this interview, that having a few different activities is great. So you can just, in those moments, you can pick up the activity that people like to just say, hey, I'm doing that stuff. Not this crypto. So what's something that you believe that most people would not agree with in any topic in life?
Ooh, dangerous question. Dangerous question.
One of the last ones.
Yeah, so. I believe I'm shocked. I am shocked about, there is this very big debate these days about freedom of speech.
Mm.
And I'm amazed how people, I thought freedom of speech was a value that we all should embrace, especially journalists and so on.
Mm.
And I find myself on Twitter defending the value of freedom of speech. I find my friends are like arguing against it. And it's like, why would you argue against freedom of speech? They're like, oh, well, people will say misinformation and lies. And I said, of course, that's why you have freedom of speech. You have the marketplace of ideas. You have this engagement, this communication, and the bad ideas get flushed out through communication. Bad ideas don't get flushed out through censorship. That's not how bad ideas go away. You're just driving the bad ideas underground. And so I just think freedom of speech is really important. It's important to get rid of racism. Yes, racists are going to come into and take advantage of freedom of speech, but by engaging with the racists, people understand that's actually a bad idea. If you never engage with racists, the idea goes underground, and when things go underground in the long term, it becomes a cancer. So yeah, that's just something I feel very strongly about. I feel strongly about freedom of speech, and I see Elon Musk doing I think a great job of trying to protect that. And it really, I just don't understand why so many people are nitpicking against him, because I understand he's like one of the richest men in the world, but if you look a little bit about how the way he lives, he's like sleeping on sofas.
Yeah.
Right now.
He doesn't own stuff.
Yeah, he doesn't own homes. He's living like a college student. He's not. He doesn't have to do what he's doing. He could buy a 1 mile yacht and have 100 people massage him right now if he wanted to.
And chill for the rest of his life.
Right.
So do you think there's a correlation between the kind of entrepreneurs out there and this mindset of freedom of speech, and then kind of like more people who fit in the mold and who are kind of scared to like go out there against the actual truth?
I think I learned this term from somebody who's in the Gen Z. Do you know what an NPC is?
No.
A non-player character. So whenever you play, let's say you play Grand Theft Auto or something, and you're playing it, a non-player character is that person just like, just walking on the street, And so my friend said, yeah, there are a lot of NPCs out there.
Mm.
And those NPCs are those people who just like follow the rules and just not thinking for themselves. They don't seem to have a spirit. They're afraid of freedom of speech. They're just following, and they're NPCs. Yeah. That's a good
one.
And we need to fight against being NPCs. We have to have spirit. We have to, think for ourselves, because if we don't think for ourselves, if you let other people think for you, it's a pretty bad formula it's a bad recipe.
Yeah, but that's kind of the nature of, like, if you look at the distribution of people, most people will be NPCs. That's just what it is. That's just life.
I agree. That's why I love the movement of decentralization, because decentralization forces or cajoles people into thinking for themselves. And centralization is the opposite.
Mm. So if there was a summary or key takeaway that people should remember from today, what would it be?
Have spirit, think for yourself, and keep your crypto in a cold wallet.
Amazing. Thank you so much for doing this.
Thanks for having me.
Thank you everyone for listening and watching. Please smash the like button and give us your feedback in comments. And I'll see you all in the next episode.
Thank you.
Thank you.